a digital asset technology company that mines cryptocurrencies and develops blockchain technology, currently owns 33,875 bitcoins as of November 25th, 2024. These companies see Bitcoin as a way to preserve value and potentially increase their wealth in the long run. Why are companies adopting Bitcoin as part of their treasury? Let's look at the rewards. Hedge against inflation. Bitcoin's fixed supply makes it a powerful hedge against the eroding value of fiat currencies. Store of value. As Bitcoin gains adoption, its value has increased significantly, providing massive returns for early adopters. Liquidity. Unlike traditional assets, Bitcoin can be accessed and liquidated at any time, offering companies quick access to funds during times of need. Brand equity. Being known as a forward-thinking company, embracing cryptocurrency can increase brand recognition and attract investors. Let's hear from Mr. Matthew Dixon, CEO and founder of Evi.io, as he explains why more companies are choosing to stack Bitcoin in their holdings.
So Bitcoin has been nothing short of astounding. So we grew from virtually zero in 2009 when Bitcoin was initially created, and we've grown rapidly to 69,000 during what I call the retail phase of adoption. So that 69,000 was then followed by a sharp pullback to the FTX low of around $15,500. And then from there, the Bitcoin fortunes transformed completely. So this was due to the institutional phase of adoption. So not only have we seen the ETF at the beginning of this year, which meant the floodgates opened really for institutional adoption. So we see institutions everywhere now stocking up with Bitcoin. There's only a very limited supply of Bitcoin, 21 million will only ever be in existence. And so the institutions are flocking to get their holding of Bitcoin. But also we're now hearing of government potentially using Bitcoin as a store of value. So Bitcoin has evolved or transformed from initially a totally speculative asset to now a real store of value, what we call digital gold.
But it's not all upside. There are risks involved in holding Bitcoin as a corporate treasury asset. Volatility risk. Bitcoin's price can swing wildly, which could result in significant fluctuations in a company's balance sheet and earnings. Liquidity risk. If Bitcoin's price drops significantly, a company might be forced to sell at a loss to raise funds, exacerbating market instability. Regulatory risk. The regulatory environment for Bitcoin is still evolving. Shifts in tax laws or crypto regulations could negatively impact a company's Bitcoin holdings. Market perception. Heavy exposure to Bitcoin might worry investors, especially during market downturns when Bitcoin's value drops. So, is holding Bitcoin in a corporate treasury a smart move? For companies like MicroStrategy, Semler Scientific, Metaplanet, and Jiva Technologies, it's proven to be a high-risk, high-reward strategy. But it requires careful planning and management of volatility. Holding Bitcoin has significantly boosted the share price of both MicroStrategy and Metaplanet. For MicroStrategy, its stock price surged over 1,000% as Bitcoin's value increased, transforming the company into a Bitcoin proxy for investors. Similarly, Metaplanet's share price has risen by more than 300% since it adopted Bitcoin as part of its treasury strategy, drawing attention from investors seeking exposure to Bitcoin's growth. Bitcoin has potential to provide massive returns and safeguard against inflation. But it also comes with risk that must be carefully navigated. Companies must weigh these factors against their financial goals and risk appetite. That's on the story for now. This is Miruchi Sharma signing off. Do like, share and subscribe to 3.TV, and for more information stories log on to our website www.3versetv.io or scan the QR code. The month of November has been great for the cryptocurrency market, and as we are moving into the bullish December, the market is showing great signs. There have been great inflows in the ETFs, both in Bitcoin ETFs and the Ethereum ETF. Also, the meme coin rally is picking up, altcoin momentum is also picking up. We have with us Mr. Manoj Dhara, our executive editor, who will give us views on these discussions and developments. What are the effects? What are the impacts? Manoj, we've seen Bitcoin moving in the range of $90,000 and $99,000. Altcoin momentum has picked up. Where do you think the market is heading? How is the market behavior right now?
So, this is a very interesting thing, Ruchi, that has happened in our markets. Let's talk about November, what happened in November, and then we can have a clear picture as we head into the December. Bitcoin has clearly recorded roughly around 130% YTD gain since January as we head into. There is a huge optimism as far as the Trump election is and the boost it has given to the cryptocurrency market. And that is actually the clear winner situation which we have. Post-halving and the Trump thing, that is something which we have seen. In November, if we talk about the Bitcoin gains, it has clocked 37% odd returns in the month of November. It has touched 99,000 over $99,500. So if we say that it has actually risen 45%, but this is actually a huge run in a month. It was never seen. And this is something which is really interesting. If we talk about the Bitcoin and the Ethereum ETFs, there is really interesting data which is coming. US investors have poured in $6.4 billion in the spot Bitcoin ETFs. They're actually a huge number. And if we combine the entire episode, it is a meager only $411 million outflow which we have seen in the Bitcoin spot. So the second reason is the huge institutional inflows and the influx which we have seen, and the number is huge. If we talk about the Ethereum, the second largest crypto by market cap, was a clear laggard as far as the Bitcoin ecosystem is concerned. Bitcoin and Ethereum used to have a very high correlation, but since the spot ETFs have been announced, Bitcoin has seen the rally. Trump ke baad mein, we have also seen that the major rally has actually led to a huge return. And here we are, $1.1 billion in the Ethereum ETFs. That is actually a huge number. For the month of November only, they have clocked in. If we combine both, they are close to around $8 billion. That is actually a huge number.
Yes. So if we talk about exchanges have emerged as a clear-cut winner. What is happening at the exchange front?
So if we talk about the exchange thing, let's discuss about how the situation works for the crypto markets. As of now, the Bitcoin balances on exchange has actually fallen to 2.28 million BTCs, which is indicating a shift towards long-term holding. As we all are aware that if there is someone who wants to sell their Bitcoin, they will move from their wallet to the exchange. So as of now, because of the bullish momentum and the larger institutional play, we are seeing less Bitcoins being transferred to the exchanges. That is actually the third important reason which we are highlighting for our viewers. So actually the decline in the exchange balances highlight the Bitcoin growing store of value, treated more like the digital gold than a short-term trading asset. That's what an analyst have quoted. And the retail investors are also showing a huge interest in the Bitcoins.
So the picture is very rosy. Everything is going very, as per how everybody is expected. But are there any concerns in the market as of now?
Let's discuss this concern later on, but we'll talk about some numbers as far as the November trading volume, and this is actually our fourth point. So November trading volume in the spot crypto exchanges have actually risen to $2.7 trillion in November. And the highest since May 2021. That is actually a very important point, Ruchi. And the fourth reason why the market is showing a lot of optimism, there is a huge volume that is going on. In October, the market has also risen. But
almost doubled.
We have seen roughly around $1.14 trillion in as far as the total volume is concerned. So 36% in November trading volume came from Binance. So if we talk about the other ecosystem and the other altcoins that are performing, Binance is actually a clear winner in that. And coupled with, if you see the other futures and options data as well, as far as the trading volume is concerned, it has recorded $2.6 trillion. This is actually again a clear winner.
Right.
And there are many exchanges such as Crypto.com, Upbit, Bybit, and the other ecosystem players. But Binance is actually a clear leader. Keep an eye on this because analysts are very optimistic about wherever there is a trading volume, it gets impacted on the coin, and hence we are seeing this not a trading investment advisory. Consult a financial advisor before making any investment bets. And if this rally continues, if this trading volume saga continues, Binance is going to become a big winner as far as this thing is concerned.
That's great. So what are the concerns in the market as of now?
There are broad-based concerns in the market. If you talk about there are whale activities, as we all are aware, that whales play a very important role as far as building up this ecosystem is concerned. Institutional players, which we have seen, this is actually our fifth point. There are a lot of reports which have come that a whale tracking report which indicates a whale which has accumulated around 12,000 odd bitcoins between the March and November has actually transferred its 1,000 bitcoins on the exchange, and hence there is a small concern. 1,000 bitcoins there will be. As we have told to our viewers that whenever a whale moves their bitcoins from their wallet to the exchange, it means it's going to sell. This is actually the concern as of now in the market, but there are less negatives, Ruchi,
and more positives.
And there are more positives. If we talk about the Ethereum, although it is not, there are positive signs because the ETFs are picking up, the coin prices are picking up. If you see the other altcoins, Ripple's XRP, since the time Gary Gensler of SEC has stepped down, the big concerns have actually moved away from the Ripple's XRP system, and we have seen it become the third largest crypto. Solana is gaining, the other layer 2s and layer 3s are gaining. There is a huge difference that is happening in the gaming ecosystem. NFTs, you cover NFTs, what's happening in that front?
NFTs have shown a little sign of positivity. The NFT trading volume for the month of November was $562 million. So there are positive signs, but not as much. I think
it's yet to pick up, that means.
And if they will see its lost glory very soon.
So actually we are seeing a shift from the Bitcoin. Bitcoin dominance has actually shrinked.
Yes,
that's the only, but that is not a negative, I can say that, because when the other market caps rise, so automatically it's a market share gain.
The share goes.
Ripple's XRP has gained from roughly around $60 odd billion to $132 billion. Right. Solana has gained, Binance BNB has gained, the other ecosystem has been gaining, and time will tell, how this but there is a very important news which has come that Boya's pivotal towards the Bitcoin. Boya is, actually a Hong Kong-based company, which is actually moved to the Bitcoin ecosystem. So Boya was actually holding roughly around 14,000 Ethereum in its wallet, and it is transferred, or it has actually sold its Ethereum and it is converted into Bitcoins. So corporate strategy, Michael Saylor, MicroStrategy is clearly working for the markets. So actually, Ruchi, this is actually a very positive November, as we have seen. Huge volumes, a big ETF influx, lesser concerns, and this is what the December is going to be. There are a lot of positive as far as the entire ecosystem is concerned.
Right. So great times are coming ahead. That's all in this conversation for now. This is Miruchi Sharma signing off. Do like, share and subscribe to 3.TV. And for more information stories, log on to our website www.3.io or scan the QR code. Crypto's heating up. Let's dive in. Onto Finance explodes 30%, trading at $1.63 with a record $994 million daily volume. Speculation around a Binance spot listing and institutional buys are fueling the rally. Influencer Gray BTC predicts Ondo could hit $15 by 2025. RV surges 9% in 24 hours, boasting $31.4 billion in deposits, a 50% jump in just 1 month. DeFi is outpacing US banks. Are we witnessing a new financial era? Tron hits an all-time high of $0.236, surging 44% this month. Founder Justin Sun's $30 million investment and bold claims that TRX is the next XRP have the market buzzing. Hedera's H-bar skyrockets 582% this month, driven by accumulation and speculation of an H-bar ETF approval. Is FOMO kicking in? Finally, Polygon's POL and Chainlink's Link are on fire. Matic jumps 25%, with 21x launching a tokenized asset exchange by 2025. Meanwhile, Link soars 37%, doubling in a month on news of its European Union regulated securities platform partnership. Crypto's booming. Don't miss the action. Follow 3.TV for more such updates. The world of blockchain has witnessed a whirlwind of developments this week, showcasing its versatility in revolutionizing industries. From tamper-proof property records in India to seamless payment systems and gaming transparency, blockchain technology continues to redefine how we interact with digital systems. The Bruhat Bangalore Mahanagarpalika has turned to blockchain to safeguard its e-Khata system, ensuring that property records remain tamper-proof. By integrating blockchain with the help of the National Informatics Center, the system now validates mutations and flags fraudulent attempts, creating an ironclad digital ledger. BBMP Special Commissioner Munish Modgil explains that blockchain's decentralized nature ensures that even if a hacker compromises one block, the remaining nodes retain the original data. This revolutionary step, which uses a system akin to cryptocurrency frameworks, offers property owners a secure and transparent process for downloading e-Khata documents via an online portal. Meanwhile, Aventus, a blockchain leader, has launched the Blockchain Factory, a cutting-edge platform empowering businesses to develop custom blockchain networks effortlessly. Designed as L3 app chains on the Aventus network within the Polkadot ecosystem, these networks promise increased utility and transaction volumes. The initiative also benefits the broader blockchain community by channeling token reward fees into the Aventus network treasury, ensuring sustainability. Eon, a blockchain payment protocol, has introduced a groundbreaking payment authorization feature leveraging the Ton blockchain. By removing repetitive steps, Eon simplifies its transactions, making blockchain-powered payments a practical choice for everyday use. This feature's first deployment, seen in ShareX's Telegram mini app, streamlines the rental of power banks, showcasing blockchain's potential to enhance routine transactions. In the booming online gaming sector, trust and transparency are paramount. Zupi, a leader in real money gaming, has integrated blockchain to tackle industry challenges. Through advanced random number generator solutions audited by independent labs and smart contract execution, Zupi ensures fair gameplay and compliance. Blockchain's tamper-proof ledger provides immutable records, bolstering trust and resolving disputes while fostering community confidence in gaming platforms. From securing property records in India to revolutionizing payments and gaming, blockchain technology is no longer just the backbone of cryptocurrencies, it's the foundation of a more transparent, fair, and inclusive digital future. As innovations like these gain momentum, the global blockchain narrative is poised to reach even greater heights. Buckle up, the blockchain revolution is just getting started. That's all in Block on the Rocks. This is me, Ruchi Sharma, signing off. Do like, share, and subscribe to 3.TV. And for more information and stories, log on to our website www.3university.io or scan the QR code.
Toei Animation, the legendary studio behind iconic anime series like Dragon Ball, One Piece, and Sailor Moon, is diving into the Web3 universe with an electrifying new collaboration with South Korea's WeMade. Together, they are bringing Den Den Garden to life, an innovative blockchain game set in the world of Toei's Den Deca Den universe. Den Deca is a mystical story of 7 Kyoto spirits aspiring to reach godhood, blending rich anime tradition with next-gen gaming on the blockchain. Think Dragon Ball meets a decentralized future. This game is part of Japan's growing movement to embrace blockchain technology, with renowned companies like Bandai Namco and Sega already experimenting with digital assets. Though Japan's blockchain gaming scene is still warming up, Den Garden represents the kind of breakthrough we have all been waiting for. The game will tap into the magic of non-fungible tokens and offer players a unique interactive experience in a world filled with sakura blossoms and supernatural spirits. If you thought your Dragon Ball adventures were legendary, wait until you experience this digital revolution. We made known for its hit blockchain game, MIR4, is no stranger to the Web3 world. And with Den Garden, they are gearing up to bring a new level of anime-inspired gameplay to the global audience. Well, that's all in today's special segment. We will keep you updated with more such interesting updates. Until then, keep watching 3.TV. Do like, share and subscribe to our YouTube channel. Do log on to the website www.3versetv.io or scan the QR code to know more.
Hello and welcome to 3.TV. I'm Vishakha Thakur and you're watching our special show Metaverse Magic. So let's start by taking a closer look at the performance of Metaverse tokens this week. The Metaverse ecosystem, with the accumulative market cap exceeding $15 billion, saw mixed trends in the past week. So while tokens like Axie Infinity's AXS gained 27.8%, Illuvium's ILV surged by 21.4%, and Engine's ENJ rose roughly around 24.2%, while others faced declines. So Sandbox's Sand dropped by 15.9%, Decentraland's Mana slipped 6.5%, and Floki Inu declined 4%. Now, after a quick check on the performance of Metaverse tokens, let's now move on to this week's exciting developments in the sector. First up, the Metaverse's cultural aspect is expanding with the return of the Qatar Adventure Metaverse experience on Roblox. So launched by Qatar's International Media Office, this second phase offers a rich virtual experience of the Qatari culture. Interestingly, Phase 1 garnered over 7 million visits, and the new iteration, running from November 29, 2024 to February 28, 2025, promises even more. So, well, this update features iconic landmarks like Hamad International Airport and Lusail International Circuit, a car racing track. In fact, adding to the immersive experience are mini-games such as the Lusail Circuit Racing game and the Pearl Diving Simulator. Well, the use cases of Metaverse are well known in the education sector, and Pearl Academy is taking advantage of it. In an interesting development, Pearl Academy has partnered with Tech Mahindra to redefine learning and innovation by launching an innovation hub focused on generative AI and Metaverse applications and gaming in Bangalore. So basically, the lab aims to empower students and professionals with hands-on experience in cutting-edge technologies, ensuring the next generation is well-equipped to drive the sector forward. Well, in another aromatic development in the space, Rasasi Perfumes, UAE's renowned luxury fragrance brand, has entered the Metaverse with Agarwood immersive experience. So Rasasi is bringing centuries-old fragrance traditions to the Metaverse in partnership with Chemitronics, a popular Indian Metaverse platform. The experience will be set within a stunning virtual forest where all the users are surrounded by Equilaria trees emitting oud's rare aroma. Interestingly, oud is one of the most expensive raw fragrances in the world and is extracted from resinous heartwood of the Equilaria tree. Well, from cultural adventures to innovation hubs and sensory-driven experiences, Metaverse is evolving as a multifaceted ecosystem. And now let's listen in to what Mr. Akhil Damodaran, founder of Ethereum, has to say about the current state of the Metaverse sector and outlook.
So if you look at the metaverse sector is now growing for almost 30%, but the peak has gone down and it has become much more mature sector. So now what has happened is, because of the maturity, now more integration of technology has happened. So if you look at metaverse, blockchain, AI, all these has to be integrated. That's what the new world looks like. So if you look at most of the companies is now trying to see how much decentralization ecosystem can be integrated with metaverse, or AI can be integrated with metaverse. With coming of Facebook and Apple and all these new companies coming up with the glasses, the more slim glasses from metaverse, I think this integration is going to be the bigger facet of all the ecosystem. So I think this is the way forward for metaverse in the next coming few years, and that's how it's going to be. It's not going to be a separate metaverse sector. It's going to be integration of all the three.
Well, that's all in this episode of Metaverse Magic. I will be back with more such interesting updates from the metaverse space. Do log on to our website www.3versetv.io or scan the QR code. This is me, Vishakha Thakur, signing off.
So we all know that airdrops are rare and exciting events in the world of cryptocurrency, offering users a chance to claim tokens and shape the future of the blockchain. And one such thrilling opportunity is being offered by Sin Futures, a leading DEX specializing in perpetual derivatives. This innovative platform is not just unveiling a new token, it's launching a whole new era of DeFi with Sin Futures Foundation and the highly anticipated F-token airdrop. As a pioneer in perpetual contracts with up to 10x leverage, Sin Futures has already carved out its place in the DeFi world. Now with the Sin Futures Foundation in place, the platform is setting its sights on community-led governance and pushing the boundaries of what DeFi can achieve. The foundation will oversee platform development, manage grants, and foster key partnerships, giving users the power to shape the platform's evolution. At the heart of this transformation is the F token, an Ethereum-based asset that offers much more than just a store of value. F token holders will gain governance rights, enabling them to vote on key decisions shaping Sin Futures' future. In addition, the token unlocks staking rewards and the fee discounts, making it an essential asset for anyone looking to thrive in the world of perpetual trading. And the best part, Sin Futures is offering 7.5% of the total F token supply, which is 750 million tokens, through its Season 1 airdrop on December 6th, 2024. If you have been an active user of Sin Futures versions 1 to 3, you are eligible for this once-in-a-lifetime chance to be a part of the next big thing in DeFi. But the excitement doesn't stop there. Leading exchanges like Bybit, Gate.io, BitGet, and KuCoin are supporting this monumental launch. Bybit is running a launch pool initiative from December 2nd to December 5th, where users can earn F tokens ahead of the official listing. Gate.io is also running a 75,000 F token giveaway, giving even more traders the chance to participate. Sin Futures isn't just another upstart in the crypto world. It's backed by top-tier venture capital firms such as Pantera Capital, Dragonfly, and Polychain, positioning it for future growth and success. With initiatives like the Perpetual Launchpad, which has already awarded $1 million in grants to emerging projects, Sin Futures is clearly committed to driving the next wave of DeFi innovation. As the countdown to the F-token airdrop begins, one thing is clear. This is your chance to get involved in the future of decentralized perpetual trading. Well, that's all in today's special segment. We will keep you updated with more such interesting updates. Until then, keep watching 3.TV. Do like, share, and subscribe to our YouTube channel. To log on to the website www.3versetv.io, scan the QR code to know more.
The Finance Ministry has informed Parliament that it has detected goods and services tax evasion of 824 crore rupees by major crypto exchanges including Binance, WazirX, CoinDCX and CoinSwitch. According to a declaration made in Parliament by Pankaj Chaudhary, Minister of State for Finance, only 122.29 crore rupees, including interest and penalties, has been recovered so far despite this significant discovery. Binance, the largest offender, accounted for a staggering 722.43 crore rupees in evaded GST. However, no recovery has been made from the Binance Group as of yet. Meanwhile, WazirX, operated by Zanmai Labs Private Limited, was found to have evaded GST of 40.5 crore rupees, but the government has recovered 49.18 crore rupees, exceeding the original evasion amount. CoinDCX and CoinSwitch were found to have evaded 16.8 crore rupees and 14.1 crore rupees respectively, with recoveries of 20.8 crore rupees and 19.3 crore rupees. The Ministry of Finance also revealed that 47 virtual digital asset service providers have been registered with the Financial Intelligence Unit India under the Prevention of Money Laundering Act. Cryptocurrency income is taxed at a flat rate of 30% along with a 1% tax deducted at source on transactions over 50,000 rupees annually. Since March 2023, crypto assets have been classified as virtual digital assets under the Income Tax Act, with exchanges and service providers required to adhere to strict anti-money laundering regulations, including Know Your Customer norms. Enforcement is overseen by the Financial Intelligence Unit India. That's all the story for now. This is Mruchi Sharma signing off. Do like, share and subscribe to 3.TV, and for more information stories log on to our website www.3voicetv.io or scan the QR code.
Hello and welcome to 3.TV. I am Vishakha Thakur. As Bitcoin consolidates and aims for $100,000 mark, the spotlight has now shifted to altcoins, where Ripple's XRP and Solana are leading the charge. So in today's discussion, we will focus on two major Layer 1 blockchain ecosystems, Solana and Ripple, and talk about the factors driving a surge in XRP and Solana, along with future prospects. So joining with me is Ekta Maurya, a crypto analyst, and 3.TV's executive editor, Mr. Manoj Thara. So hi Manoj and welcome Ekta to 3.TV. So Manoj, let's start with XRP. We have seen a remarkable surge in XRP recently, and its market cap has touched a whopping $156 billion. So what factors are driving this surge?
Actually, there are several factors, Vishakha, as you have rightly said. There was a rally in Bitcoin, and now it's in the consolidation phase. So there are 3-4 factors, that is actually the reason why the XRP ecosystem is up. First is $156 billion market cap is actually a 300% rise in the November itself. 3 major reasons: to market sentiment, and there is a bit of regularity, clarity as far as the XRP ecosystem is concerned. Gary Gensler resignation is actually and in fact a very, very, very positive sign for the XRP ecosystem. There was a case that was hovering over the ecosystem, and with Mr. Gensler stepping down, this is actually the true winning situation for the XRP. Paul Atkins, rumored to be SEC chair, which has been in the fray of SEC, and I think so. These are the few positives that is actually driving the XRP price.
Okay, so Ekta, as Manoj shared few aspects or the factors that are driving a surge in XRP, what major highlights have you seen, and what factors are driving the surge? If you would like to add something to what Manoj just mentioned.
Definitely. I think the most important factor this cycle was the lawsuit. This lawsuit between the SEC and Ripple has dragged down the price of XRP over the past 3 years that it has been running. But now that there is an expectation of this lawsuit to be withdrawn or probably to come to an end, it is being expected that Ripple would bag a win this time if Gary Gensler is no longer the SEC chair. So with all these discussions, the community and the retail traders that have driven XRP price higher have a positive sentiment. There is a lot of optimism surrounding XRP price. Also, the stablecoin launch, the stablecoin that Ripple is preparing, there is an expectation that they will receive regulatory approval soon. These factors are driving XRP price higher.
Okay, so are there any technical trends you think one should keep an eye on?
I think right now XRP is kind of overheated at the moment, and traders should keep an eye out for any reversals in price, maybe a correction, because XRP does have a correlation with Bitcoin. If there is a major decline in Bitcoin price, it misses the $100,000 mark by a large magnitude, then I think you need to expect a correction in XRP. But XRP is definitely going to cover ground, and with all the updates that we expect soon, it will definitely correct and then make another move up. So do consider that an opportunity to enter if you've been a sideline trader for some time.
Okay, so Manoj, Ekta mentioned that XRP will soon launch RLUSD, and it is also working with major financial institutions. So would you like to highlight on that or throw a light?
Yeah, I agree with what Ekta has actually highlighted. The stablecoin is actually a big winner. In fact, there is a trio which is the XRPL, AMM, which is the automated market making, and the stablecoin ecosystem is expected to boost liquidity adoption and improve efficiency and create a better ecosystem for the retail and the institutional players. As you already said that there are key notable partners in the Ripple ecosystem that are actually adopting Ripple is the American Express Bank, Standard Bank, UBS, and the others who are actually adopting the Ripple's ecosystem and giving a boost to it.
All right. So coming to meme coins, Ekta, what trend do you see in meme coins? Are they surging?
So Lana was driven largely by meme coins. I think as a seasoned trader, that's what I see in the market. Now Ripple is rallying on the back of meme coins. A lot of new tokens being launched on the XRP ledger, and the major ones that, even though the performance continues to lag if you compare it with the Solana ecosystem, for XRP, this is something new this cycle. And this is where the capital is now rotating. The gains or the profits that traders are taking into XRP ecosystem are now slowly moving into the meme coins. There is more speculation and more expectation of gains in meme coins. So that's the trend that I've noticed.
Yeah, I actually agree with Ekta. There is a big concern in this market as far as the pump and the dump schemes are concerned. Usually this happens when the bull run, we are seeing a big bull run in the cryptocurrency markets. I want to highlight few meme coins, on the XRP ledger who have actually gained, such as the Army token. It has risen from $1 million market cap to $90 million in few days. Bear and MAC tokens nearly $30 million each. However, platforms such as Magnetic X and First Ledger are helping attract traders and bringing them back to the XRP. And although the system is gaining a lot of fees, but this is the pump and dump schemes, the rug pulls can happen. So this is not a technical advisory, but investors should consult their financial advisors before making any investment bets. There are few fundamental reasons which they should explore first, rather than going and lapping up the penny coins and the meme coins as well. That's what I wanted to highlight.
All right. So, we have seen a remarkable surge in XRP as we are talking about it, and investors should be careful about all the pump and dump schemes which are going on in the market currently, along with the price surge or rallies in different altcoins as well. And apart from that, AI NFT integration is also playing a major role or a factor in driving the price of XRP. Would you like to highlight on that?
I mean, Call AI is integrated with the XRP. This is actually the news which you have highlighted. This is not an attractive thing to to attract, or the fundamentally strong reason. But its multi-chain ecosystem and enhancing blockchain connectivity for NFT creation is a fundamental reason why there is a small premium which has been given to the XRP versus the other ecosystem.
All right, so we talked all about XRP, and now let's move to the Solana ecosystem. So the Solana ecosystem is equally facing an uptick, and all the meme coins associated with Solana or the pump.fund, which is on Solana, has also generated a great number in revenue recently. So would you like to highlight on what are the factors driving the price of Solana?
So Solana, there are many reasons. First reason is the Grayscale has become the latest entrant to the Solana ETF. We have seen what happened with the Bitcoin ecosystem. $106 odd billion AUM ETF. Ethereum spot ETFs were approved and actually a clear winner. In the month of November, roughly around $7 billion and $1 billion in the Ethereum ecosystem. Despite a huge sell-off initially when it started, this can be a big boost to the Solana. That's what the analysts are saying. And once it's approved, it's going to be listed on as far as the New York and the other stock exchanges are concerned.
Yes. Okay, so Manoj highlighted few reasons. Ekta, would you like to add to it?
Definitely. I think what's really interesting is that Solana has crossed a lot of milestones, which has attracted retail traders this cycle. When the price hit 263, the new all-time high, it was the highest level since 2021. And not just that, institutional capital that has been flowing into Solana, like he mentioned about the ETF, right? So months to date, there has been an inflow of nearly $40 million into Solana-related funds, and this is largely institutional capital. So this is another factor that's driving gains in Solana, apart from the meme coins.
And I would like to add to what Ekta has said. There is a big thing that is happening as far as the Solana ecosystem is concerned. It's the Pump.Fund, the launch pad. There are a few numbers which I wanted to bring for our viewers. In a single day, roughly around 40,000 tokens were launched on the Pump.Fund protocol, which is actually using the Solana ecosystem. 521 tokens were generated in the past 24 hours. And Tuesday itself, it made a $3.1 million in the fees actually collected, bringing its total revenue to $278 million. So this is actually a big news. Pump.Fund is making huge money for the Solana ecosystem. And as we already highlighted, the meme coin market cap has scaled to $20 billion, which are using the Solana ecosystem. And the notable rise of Solana meme coin industry has heavily been impacted by the Pump.Fund launchpad, which I have said.
Correct. So as you pointed out that a lot of meme coins are also gaining traction on Solana. Ekta, would you like to highlight on that? We have seen that Bonk, Dogwif Hat, Popcat, and Peanut, and many other meme coins are gaining traction. So they have a combined market cap of around $20 billion. So what's your take on that?
I think it's really interesting to see where typically we used to only hear about Dogecoin, Shiba Inu or Pepe. These were the coins that mostly people traded, and they earned the title of kind of the blue chip memes where you can safely invest. But this cycle we have seen Dogwif Hat, Bonk, Popcat, Peanut and Mew. These top 5 Solana meme coins, each of them has a market cap between $850 million and up to $3.35 billion. And this is really a major gain this cycle where nearly each of these tokens has added about triple-digit gains this year in year-to-date gains. And this is really a major move for all Solana traders and Solana ecosystem traders because this definitely improves the scope of how much you can gain if you're trading in the Solana ecosystem. This was basically what people did in the early days of Dogecoin and Shiba Inu. So if you've missed the train on that one, I think Solana meme coins are kind of the way to go right now. You've not really missed it. The rally is still going on.
That's quite interesting. And now coming to the institutional adoption of Solana, a lot of institutions such as Citi, Franklin Templeton have all opted for Solana apart from the other blockchains and, have started taking initiatives on that. And apart from that, are there any other reasons or other partnerships that are a key focus right now?
You mentioned Franklin and Citi. Visa is the third who is actually using the Solana USDC, kind of an ecosystem. Institutional adoption is the key reason, why this ecosystem is gaining traction. Grayscale, as we have already highlighted, institutional adoption, meme coin frenzy, Pump.Fund protocol, a big winner over their network activities. And if you talk about the entire TVL, there are a few numbers which I would like to highlight. The Solana network has over $9 billion in the current TVL and has $4.7 billion in its stablecoin market cap. In the past 24 hours, Solana has registered over 5.7 million active addresses compared to just half a million those on the Ethereum ecosystem.
Wow. So in fact, Solana provides scalability and, it processes around 65,000, in fact, more than that, transactions per second. So that is the main reason which is also driving, a lot of institutions to use Solana. And Ekta, in the end, would you like to give some price predictions or highlight some of the key trends or technical trends?
Yes, definitely. For XRP, the cycle looks like XRP can hit between $4.5 and $5 easily. Given the current ongoing trend, I'm expecting that the gains will continue. The rally has already come close to $3. Once that level is breached, we can expect $5 as an optimistic target. For Solana, an optimistic target would be $360. It might look conservative. There are analysts predicting up to $400 rally in Solana, but I think this is conditional. If Solana continues to outperform Ethereum in terms of decentralized exchanges and the metrics, if protocol revenue keeps on climbing, then market cap can increase. So yes, then you can expect a rally to $400. If that level is breached, definitely expect between $450 and $500 by the end of the cycle. which I'm hoping is in early 2025.
So that's done. Thank you so much, Ekta. It was wonderful having you, and thank you so much for joining on such a short notice.
See you. Thank you.
So thank you so much for your valuable insights, Manoj.
you.
And would you like to give some closing comments?
Absolutely. XRP and the Solana ecosystem are gaining traction. Investors are advised, do not fall prey to the pump and the dump schemes. Usually rug pulls do happen in the bull markets, and this is a cautious advisory from our side. Thank you so much.
Picture this. The cryptocurrency landscape in the United States is on the brink of a seismic shift, one that could redefine how institutional and retail investors approach Ethereum. A December 2nd report from Bernstein Research has set the crypto world abuzz with speculation about a game-changing addition to Ethereum ETFs, staking yield. Yes, and with the looming inauguration of Donald Trump 2.0, the timing could not be more tantalizing. Staking, for the uninitiated, is Ethereum's answer to passive income in the digital age. So by locking up Ether as collateral with network validators, stakers earn rewards tied to network fees and activity. While staking carries the risk of slashing the loss of collateral if a validator misbehaves, it offers consistent returns, which currently sits at an annualized 3.1% according to stakingrewards.com. So the prospect of integrating staking into Ethereum ETFs has been a long-standing ask from ETF heavyweights like Fidelity 21 Shares and Franklin Templeton. However, regulatory bottlenecks under the current SEC leadership have kept this lucrative feature off the table. Enter Donald Trump, whose campaign promise to transform the US into the world's crypto capital has fueled hopes for a paradigm shift in regulatory attitudes. So, Bernstein forecasts that staking yields could escalate to 4 to 5% annualized percentage returns in a high-activity Ethereum ecosystem. And this would not only make Ethereum ETFs more attractive to investors, but also position ETH as a dual yield asset capital appreciation paired with staking income. So the math is hard to ignore. In 2024 alone, Ether investment funds raked in a record $2.2 billion in net inflows, surpassing the 2021 peak of $2 billion per coin shares. The turnaround in sentiment has been dramatic, and adding staking yield to ETFs could turbocharge this momentum. Matthew Seekel, Vanex head of digital asset research, paints an even rosier picture for Ethereum. He projects that the network could generate $66 billion in annual free cash flow by 2030, and potentially driving ETH's price to a staggering $22,000 per token. While the Trump administration's reported plans to install crypto-friendly leaders at the SEC could finally tip the scales in favor of staking yields in ETFs. This regulatory green light would mark a watershed moment for Ethereum, cementing its position not just as a technology platform, but also as a financial powerhouse. For investors, the message is clear. Keep a close eye on the evolving regulatory landscape. If Trump 2.0 delivers on its crypto-friendly promises, the combination of staking yields and surging institutional interest could propel Ethereum into uncharted territory. The crypto market is no stranger to thrilling twists, and this one might just be the blockbuster of 2025. So that's all for now. Keep watching 3.2TV for more such updates, and do log on to our website www.3versetv.io or scan the QR code. This is me, Vishakha Thakur, signing off.
What distinguishes this, the digital capital?
Look, when we saw digital photos transform, a lot of people didn't get the fact that Kodak was going to get replaced by Instagram and Facebook, but they get digital photos. Digital capital is what happens when your long-term store of value goes from a building or goes from a portfolio of stocks to a digital asset like Bitcoin. Bitcoin represents the digital transformation of hundreds of trillions of dollars of capital in the world.
Right.
No one expected to see it, so they don't quite get what it's going to be, except for the fact it's worth all the money in the world.
Bitcoin has touched $100K price point.
Super excited to see that Bitcoin price has crossed $100,000.
Bitcoin has just smashed through the $100,000 mark for the first time ever, making history as it sets a new precedent in the world of digital finance.
Bitcoin crossing 100,000 USD is definitely a huge milestone that's been crossed.
I'm celebrating it with Bitcoin colored flowers and a big green candle there in the back.
The major factors that have influenced this price rally are the allocation by institutional investors, the capital that has been flowing in spot Bitcoin ETFs.
We have also seen the rise in value for other cryptos like Cardano, Solana, ODS, etc.
Bitcoin stood for financial inclusion, trustless and borderless payment.
So as we speak, Bitcoin's market cap has soared to an astounding $2.04 trillion, driving the entire cryptocurrency market to a record high valuation of $3.68 trillion. Now it's clear that Bitcoin surge is no fluke. This is a calculated rise driven by a combination of market forces, corporate adoption, and regulatory shifts. So the past weeks have been nothing short of explosive for Bitcoin. Since November 5th, its price has skyrocketed by over 50%, and year-to-date, Bitcoin has more than doubled in value, starting the year at around $44,000. So what's behind this meteoric rise? First, let's talk about the regulatory environment. So with US President-elect Donald Trump nominating Paul Atkins, a known crypto ally, to lead the US SEC, the stage is set for more favorable regulation for the crypto industry. As a former SEC commissioner, Atkins is a staunch advocate for cryptocurrency, and his appointment signals a shift away from previous regulatory crackdowns. Now, Trump's promises to embrace the crypto sector, including his support for a national Bitcoin reserve, have undoubtedly fueled investor optimism, pushing Bitcoin's value to this historic peak. But it's not just political wins are pushing Bitcoin higher, as major companies are embracing Bitcoin in ways we have never seen before. MicroStrategy, under the leadership of Michael Saylor, now holds over 386,700 Bitcoin, valued at more than $40 billion, and the likes of Microsoft are also exploring Bitcoin treasury strategies, and these moves are clearly lifting Bitcoin's credibility in the corporate world. Joining us today to decode this historic rally are two stalwarts of the industry, Mr. Raj Kapoor and Mr. Prasanna Lohar. They'll share their expert insights into the key drivers behind this unprecedented surge and what it means for the future of digital finance. Let's listen in.
Bitcoin crossed 100K. Is crossing 100K is not just an accident, it's not a fluke. It's the ultimate collision of market innovation, corporate strategy, political winds of change, and at the heart of all this is the spot Bitcoin ETFs, adoption by institutions, Bitcoin halving cycle, and a seismic shift in US regulatory attitudes. But institutions just aren't buying Bitcoin, they are hoarding it. Look at MicroStrategy, it's become a treasury, it's sort of a treasury into a Bitcoin fortress. Or look at Metaplanet, which we see Bitcoin as a hedge against currency debasement. These corporates, again, are just small and strategic. They are actually symbolic. Bitcoin is no longer just digital gold. It's the lifeboat, I say, for navigating the stormy seas of inflation and policy chaos. That, I think, is also moved to pass the 100K. The tipping point has happened. So now, what happens when you mix adoption by institutions, ETF, innovation, halving, a regulatory green light? You get a perfect storm that has propelled the Bitcoin to these six figures. This isn't just a price surge, my friends. It's a paradigm shift. And Bitcoin has officially transcended its origins as a rebel asset and emerged as a global financial powerhouse.
And it was all anticipated. It's a bull run. So not only Bitcoin, many other cryptos will go up and up. If you look at the whole momentum for next 10 years, maybe once we talk in 2030, we may talk maybe 10 times what we are talking for a Bitcoin. Because Bitcoin is a mainstream store value cryptocurrency, and it is unstoppable momentum. The way it is being adopted by many countries, many corporates, investors. Many companies like BlackRock and Fidelity and like some of the corporates has always looked at Bitcoin as one of the strategic investment. In India also we have some ETFs. I think ETFs acts as a crucial investment vehicle for institutional investors. As you said, MicroStrategy and Fidelity are going ahead to have those reserves of a Bitcoin. Many will follow that norm to have in their own treasury to have a Bitcoin or a similar like store to value cryptocurrency. While US has anticipated back in 1940s where they lift up the gold reserve around the world and made the USD very strong currency. Similarly, I think this would be another strategical or tactical movement by Trump and others. That's what we can hear from the news. I would say while we have reached to one milestone or some one value like 1 lakh USD, I think that will go 10 lakh also. Maybe if you just have to wait and watch the way more adoption of people will come.
Now, even more notable, the launch of spot Bitcoin ETFs by giants like BlackRock and Fidelity in early 2024 has opened the floodgates for institutional investors. These ETFs have already attracted over $104 billion in assets under management, providing a more secure and accessible way for traditional investors to tap into Bitcoin. Now, let's talk about Bitcoin's fourth halving that took place in April. So this event has historically been a powerful catalyst for Bitcoin price surges, as it reduces the number of Bitcoin entering circulation. With Bitcoin supply tightening, the price naturally faces upward pressure, and we have already seen the impact. The halving event triggered a surge, and the subsequent increase in demand has led to Bitcoin's breathtaking rise to $100,000. Now, another factor to consider is the Mt. Gox incident. Yes, the bankrupt crypto exchange recently moved over $2.4 billion worth of Bitcoin to an anonymous wallet, raising concerns about a possible market sell-off. Yet, despite these unsettling movements, traders are unfazed. Whether this surge is sustainable remains to be seen. But one thing is for sure, Bitcoin's journey is far from over. The $100,000 milestone is just the beginning. The question now is, how far can Bitcoin go? Only time will tell. But as it stands, Bitcoin is poised to redefine the future of finance. So that's all in the story. Keep watching 3.0 TV for more such updates, and do log on to our website www.3ostv.io or scan the QR code. This is me, Vishakha Thakur, signing off.
In November, the crypto industry saw a significant drop in phishing attack losses, with scammers stealing $9.3 million from over 9,200 victims. This marks a decline of more than 53% from October's $20.2 million in losses. However, the risks remain, and cybersecurity experts are warning that phishing attacks could spike again in December as scammers take advantage of the increased holiday spending. In one of the largest incidents, a single victim lost $661,000 in staked Ethereum, showcasing the high stakes involved in these attacks. The primary method for these phishing scams continues to be malicious signatures, where unsuspecting users authorize harmful transactions, resulting in the complete drain of their wallets. Recently, BNB Chain faced a significant rise in sandwich attacks in November. These attacks exploit traders by manipulating transaction timings to disadvantage them, with 35.5% of BNB Chain blocks affected during the month. The impact was severe, with millions of dollars lost due to this manipulation. Basically, a sandwich attack occurs when an attacker exploits a large trade on the decentralized exchange by placing two orders around it, and one before, which is front running, and one after, which is back running the victim's trade. For example, if a user tries to buy 1,000 Ethereum, the attacker buys Ethereum beforehand to drive up the price and then sells it after the victim's purchase at the inflated price, profiting from the price difference. Now let's turn to Mr. Dhrupad Das to get more insights on this.
Now when we come to Binance, It's true there's been a number of reports that note a significant increase in the number of users that have found themselves sandwiched by bots on the network. And this is specific to the BNB chain, but I would say that sandwich attacks are by no means a phenomena only on the BNB chain. It's just that that's where the spike is right now. And the recent spikes in these bot activities seems to coincide with the overall growth of DEX activities. Because as the DEX activity increases, these sandwich attacks are also increasing, because I suppose newer and newer people are coming into this ecosystem. So this is one of the causes for the exploit.
Recently, Dedi Levit, CEO of Cywers, also highlighted the need for more security innovations like MEV Guard, introduced by PancakeSwap. So an MEV Guard is a tool designed to protect users from minor extractable value attacks, particularly sandwich attacks, on decentralized exchanges. It works by preventing front-running and back-running on transactions, ensuring that trades are executed at fair prices without manipulation, thereby improving security for traders on platforms like PancakeSwap. Speaking of securing the crypto space, Pump.Fund, the Solana-based meme coin launchpad, experienced a significant drop in revenue during the final week of November after reports of disturbing content on its live stream feature. Initially, Pump.Fund saw a surge in revenue, reaching $33 million in the third week of November. However, by December 1st, that dropped to $11.31 million, a 66% decline. This drop followed incidents where users made threatening comments in live streams, including alarming claims of violence. Many industry experts and users believe that Pump.Fund may be forced to wind down its operations due to the recent challenges and revenue decline. The platform disabled the live stream feature in response. Today, we are joined by an expert, Mr. Nikhil Matre, who will share his insights on the situation. Given the significant revenue drop from $33.83 million to $11.31 million after disturbing incidents on its live streams, do you think Pump.Fund might be forced to wind down its operations?
The platform's sharp decline in revenue and shutting down of features due to security concerns seems to be a very challenging time for a Pump.Fund platform, right? But the platform might weather the storm and might be set for a comeback, provided the team really focuses on improving user engagement and in establishing trust with new and existing users.
Recently, Ripple also issued a warning about these rising scams, especially phishing attempts, following the surge in XRP's price. The company reminded users that it will never ask for XRP transfers and caution should be taken when receiving messages from individuals impersonating Ripple executives. As we face these rising threats, crypto exchanges need to adopt comprehensive security measures. Solutions like MEV Guard, which PancakeSwap launched to prevent sandwich attacks, are a step in the right direction. Exchanges should also implement anti-phishing tools to educate users on identifying malicious transactions and promote two-factor authentication. By doing so, they can help reduce risks and provide a safer environment for users, especially with the holiday season approaching. Well, that's all in today's special segment. We will keep you updated with more such interesting updates. Until then, keep watching 3.0 TV. Do like, share and subscribe to our YouTube channel. Do log on to the website www.3voicetv.io. Scan the QR code to know more.
Hyperliquid's HYPE token has seen an astounding surge of over 600% from a mere $2 to $13.73 just 1 week after its launch on November 29, 2024. Well, this meteoric rise has catapulted the token's market cap from $620 million to over $4 billion, positioning itself for a potential rally to $25 within the next 6 weeks, as per analysts. Now, Hyperliquid is a decentralized perpetual futures exchange founded by Jeff Yan, a former Hudson River trading executive. The exchange has its own high-performance Layer 1 blockchain that is capable of processing 100,000 transactions per second. So let's explore the key drivers behind this remarkable price increase of the HYPE token. A pivotal factor has been Hyperliquid's unprecedented airdrop, which has captured significant attention in the market. Hyperliquid conducted a historic airdrop of 310 million HYPE tokens, which fueled the massive appreciation in price. A significant 31% of the total token supply of $1 billion was allocated for this airdrop. And another significant reason is Hyperliquid's innovative blockchain and decentralized exchange features. So Hyperliquid operates on a high-performance layer 1 blockchain that can process 100,000 transactions per second. The platform uses the custom HyperBFT consensus algorithm, which ensures fast, transparent transactions with zero gas fees. No wonder Hyperliquid registered a remarkable increase of $290.21 million in its total value locked within 7 days, and this surge in TVL positioned Hyperliquid as a top player in the DeFi sector. Well, Hyperliquid also recorded all-time highs in 24-hour trading volume, surpassing $8.5 billion in open interest, hitting a whopping $3 billion. So these significant features and record numbers are more than enough to justify the robust demand from retail traders, positioning Hyperliquid as a leading player among decentralized exchanges, competing with industry majors such as DYDX and GMX. So that's all in this story. Keep watching 3.0 TV for more such updates, and do log on to our website www.3worstv.io or scan the QR code. This is me, Vishakha Thakur, signing off.
The crypto market is ablaze, with Bitcoin shattering records to surge past $104,000, a historic high that has created an unforeseen buzz in the financial world. While meme coins are fueling a trading frenzy, Solana's decentralized exchanges are raking in millions, and traders are swinging between exhilarating highs and crushing lows. Yet, amid this chaos, a quiet class of victors is emerging. Not the traders, not the speculators. The real winners are the architects of the crypto ecosystems, those who build the picks and shovels of this digital gold rush. Solana-based decentralized applications have witnessed an unprecedented surge in activity, with decentralized exchanges reaping massive profits. Radium, an automatic market maker, set a new record earlier this month, collecting $11 million in 24-hour fees. Daily DEX volumes on Solana exploded from $1.6 billion to a staggering $10 billion peak, according to Blockworks. This mirrors the California gold rush of the 19th century, where the wealthiest were not the gold miners but the entrepreneurs selling tools and services to them. Similarly, in crypto, infrastructure providers like blockchain networks, trading platforms, and wallet providers are cashing in on this modern gold rush. David Gogol of DYDX Foundation highlights that exchanges are consistently the biggest beneficiaries during bull runs. The surge in trading volumes directly translates into substantial fee revenues. Non-custodial wallets like Phantom are carving a niche by offering seamless integrations. These wallets are now capturing significant activity, particularly in mobile-first ecosystems. Companies like Circle and Tether benefit from increased stablecoin supply, acting as critical on-ramps for the growing user base. Platforms like Pump.Fun have seen transaction volumes skyrocket. Despite controversies, these continue to generate significant fees from token launches. Gracie Shen, CEO of BitKit, draws parallels between the current market and the 2017-18 ICO boom, where infrastructure providers, rather than participants, reap the lion's share of profits. Similarly, in this bull run, those enabling the trades, exchanges, wallet providers, and dApps are minting fortunes. While trading volumes are at record highs, analysts are cautious about the bull run's longevity. Solana's fees skyrocketed during the frenzy but have stabilized now, indicating the market could normalize. Diversifying use cases beyond concentrated dApp activity is seen as critical for long-term growth. As the crypto market evolves, the picks and shovels of the blockchain ecosystem, DEXs, wallets, stablecoin issuers, and infrastructure providers remain the biggest winners. For traders and speculators, leveraging these tools with calculated strategies might still yield profits, but the infrastructure backbone is where the real gold lies. That's on the story for now. This is me, Ruchi Sharma, signing off. Do like, share, and subscribe to 3.0 TV. And for more information and stories, log on to our website www.3worldstv.io or scan the QR code.
In the heart of a nation known for its rich tapestry of culture and innovation, a digital revolution is quietly brewing. India, a land of a billion dreams, is on the cusp of becoming a global powerhouse in the Web3 and crypto ecosystem. According to a recent report by Hashed Emergent, a Web3 venture capital firm, India is not just participating in the Web3 revolution, it is spearheading it. Well, the country is home to a staggering more than 1,000 Web3 startups spanning diverse sectors such as finance, infrastructure, and entertainment. So this startup ecosystem is not merely a collection of companies. It is a dynamic network fueled by creativity and ambition, with a cumulative funding of over $3 billion since 2020. So the first 9 months of 2024 alone saw an influx of $462 million in investments, marking an impressive 82% growth from the previous year. This surge is largely attributed to global Web3 funds and accelerators, which are increasingly recognizing India as a fertile ground for innovation. The report highlights that a majority of these investments are directed towards Web3 infrastructure businesses, laying the groundwork for a robust digital economy. As the world races towards a decentralized future, India stands out with its impressive pool of talent. Currently, the country boasts nearly 12% of all crypto developers globally, making it the second largest developer base after the United States. Projections indicate that by 2027, India will ascend to the top spot, further solidifying its position as a leader in the Web3 space. Now, despite initial setbacks due to a challenging crypto tax regime, 2024 has witnessed a remarkable resurgence in crypto investments across centralized exchanges. Data from CoinDCX reveals that 45% of retail portfolios in India now include blue-chip cryptocurrencies, underscoring a shift in investor sentiment. Well, the gaming industry too is on the brink of a transformation, with gaming platform Listo predicting it will reach a staggering $9.2 billion in the next 5 years. Web3 gaming is emerging as a key contributor, driven by higher average revenue per user and a growing appetite for immersive digital experiences. The Indian government, while navigating the complexities of regulation, has initiated several programs to bolster Web3 growth. While major use cases such as land registry, digital certification, and supply chain management are being explored, showcasing the potential of blockchain technology to enhance transparency and efficiency. As traditional economy goes in for an overhaul, making way for a new dawn, one that promises to be as exhilarating as it is unpredictable. The future is decentralized and India is ready to lead the way. That's all in the story. Keep watching 3.0 TV for more such updates, and do log on to our website www.3worldstv.io or scan the QR code. This is me, Vishakha Thakur, signing off.
The NFT market kicked off December with a surge in sales exceeding $187 million in weekly transactions during the first week of the month, continuing an upward trend that began in October. This performance eclipsed the strongest week of November, which recorded $181 million in sales. Ethereum, the leading blockchain for NFTs, saw a substantial increase in sales totaling $92 million, a 44.7% jump from the previous week. This boost was fueled by the strong performance of popular NFT collections such as Pudgy Penguins and CryptoPunks. Pudgy Penguin in particular stood out with $25 million in sales, while CryptoPunks raked in $16.5 million. In a significant development, Pudgy Penguin surpassed the Bored Ape Yacht Club to become the second largest NFT collection by market cap. The collection's floor price surged 8.4% in just 24 hours, reaching 22.1 ETH, that is $86,922. Over the past week, its value soared nearly 45%, propelling its market cap to $772.5 million, overtaking BAYC's $755 million. This boost follows the announcement of an upcoming airdrop for a new Pudgy Penguins token, Pengu, set to launch on the Solana blockchain later this month. Meanwhile, Adidas has expanded its footprint in the Web3 space with the launch of its first physical NFT-based sneaker collection in association with the social lifestyle app Step & Go. Starting December 13th, Adidas will release 1,200 limited edition Ultra Boost 5 running shoes available on the Moore marketplace. NFT holders from the Step & Go Adidas Genesis collection will gain exclusive access to raffles for these physical shoes. In another Web3 development, Nissan has unveiled plans for a new Japanese loyalty program called Nissan Passport Beta. The program will offer NFT-based membership to 5,523 lucky winners, with rewards including test drives of futuristic and limited edition cars. As the NFT market rebounds and continues to draw attention from major brands and projects, signs point to a possible resurgence of the industry's former glory. That's all the story for now. This is Mirchi Sharma signing off. Do like, share and subscribe to 3.TV, and for more information stories log on to our website www.3university.io or scan the QR code. The earth is on fire, literally and metaphorically. Temperatures are rising. Storms are intensifying, and ecosystems are vanishing. As the world scrambles for solutions, a surprising savior emerges in the form of blockchain technology. Often vilified for its energy demands, blockchain is now proving it can be a powerful weapon in the fight against climate change, offering transparency, efficiency, and innovation to tackle one of humanity's greatest challenges. Blockchain's potential extends far beyond powering cryptocurrencies. Its decentralized and immutable design is transforming how industries manage carbon credits, trade renewable energy, and track climate data. What are carbon credits? They are tradable permits that allow companies to emit a certain amount of greenhouse gases. Each credit represents 1 ton of CO2, that is carbon dioxide, or its equivalent. By buying credits, companies can offset their emissions. But the system only works effectively when there is transparency and accountability. Platforms like Token Protocol leverage blockchain to tokenize carbon credits, creating a tamper-proof record of their issuance, trade, and retirement. This ensures accountability, prevents fraud, and bolsters confidence in corporate sustainability efforts. Energy markets too are undergoing a blockchain revolution. Peer-to-peer trading platforms such as Power Leisure enable solar panel owners to sell surplus energy directly to neighbors, bypassing traditional utilities. In communities like Fremantle, Australia, this model not only promotes renewable energy but also empowers consumers with greater control over their energy choices. Meanwhile, decentralized energy grids like the Brooklyn microgrid in New York allow residents to trade solar energy locally, fostering resilience and independence. Reliable climate data is another critical area where blockchain shines. Accurate records of emissions and restoration efforts are essential for shaping environmental policies. The Green World campaign, for example, uses blockchain-based smart contracts to reward land regeneration efforts verified through satellite data, ensuring transparency and encouraging global participation. However, blockchain's journey is not without hurdles. The energy-intensive nature of systems like Bitcoin's proof of work has drawn sharp criticism because proof of work system consumes a significant amount of energy due to the way it validates transactions and secures the network. On the other hand, newer energy-efficient mechanisms like proof of stake, as adopted by Ethereum, are leading the way in reducing blockchain's environmental footprint. In a world that's constantly battling with new age environmental crises, blockchain comes across as a beacon of hope, a potent tool that could redefine how humanity confronts its most daunting challenge. With collaboration and innovation, it might just help make our planet a better place to live in. That's all in this episode of Block on the Rocks. This is Miruchi Sharma signing off. Do like, share and subscribe to 3 TV, and for more information and stories, log on to our website www.3university.io or scan the QR code.
Tether's USDT continues to dominate the stablecoin arena, flexing its muscle with staggering adoption metrics that outshine even Bitcoin and Ethereum. With 109 million on-chain wallets now holding USDT, it has more than double the number of Bitcoin wallets and is inching closer to Ethereum's 128 million wallets. Add another 86 million accounts on centralized platforms that have received USDT deposits, and the stablecoin's grip on the crypto ecosystem becomes undeniable. According to Tether Insights, centralized exchanges recorded 4.5 billion web visits in the first 3 quarters of 2024. Analysts estimate that up to 50% of the 330 million users who have interacted with USDT still hold it, emphasizing its staying power. Now, in emerging markets, small USDT balances have immense significance. Around 18.7 million wallets hold balances between 1 cent and $1, amounts that can represent meaningful sums for people living on less than $10 a day, as noted by the World Bank. For these users, USDT is not just a speculative asset, it's a lifeline for payments. Well, USDT's wallet dominance remains unchallenged. On November 1, 54 million wallets held more than 1 cent of USDT, 4 times that of any competitor. A review of 25 stablecoins across 10 blockchains, covering 97.5% of total stablecoin supply, confirmed USDT's commanding lead. Meanwhile, alternative stablecoins such as USDC and DAI have seen paltry growth of just 3% in wallet holders over the past year. So USDT's popularity surged by 71% in 2023 and the year before by as high as 129% in 2022, driven largely by smaller wallets under $1,000, a shift fueled by the FTX collapse and a growing preference for self-custody. Now, even during the Silicon Valley Bank crisis in March 2023, when USDC and DAI depegged, USDT's user base remained resilient, further solidifying its market dominance. So USDT's market cap now exceeds $138 billion, cementing its status as the largest stablecoin in the crypto sector. Its recognition by the Abu Dhabi Global Markets Financial Services Regulatory Authority marks another milestone, enabling its licensed providers to integrate USDT into regulated financial ecosystems. This approval spans multiple blockchains, including Ethereum, Solana, and Avalanche, aligning with UAE's vision to lead in digital finance. So as USDT extends its lead in wallet adoption, utility and market cap, its trajectory seems unstoppable. Whether facilitating microtransactions in emerging markets or anchoring portfolios in turbulent times, USDT is more than a stable coin, and it has more than proven that. That's all in this story. Keep watching 3.2 TV for more such updates, and do log on to our website www.3worstv.io or scan the QR code. This is me, Vishakha Thakur, signing off.
Bitcoin mining powerhouse Mara Holdings Incorporation just made waves by purchasing 11,774 Bitcoin for a jaw-dropping $1.1 billion. This latest acquisition, announced via X, formerly Twitter, on December 10th, came at an average price of $96,000 per Bitcoin, financed through a zero-coupon convertible note offering. As of December 9th, Mara holds 40,435 Bitcoin, valued at a staggering $3.92 billion at Bitcoin's current price of around $97,000. Mara achieved a groundbreaking feat by becoming the first public Bitcoin miner to surpass a hash rate of 50 exahashes per second. For context, hash rate measures the computational power used to solve complex mathematical puzzles that secure the Bitcoin network and verify transactions. The higher the hash rate, the more mining dominance a company wields. Doubling its energized hash rate in 2024, Mara leaped from 36.9 exahashes per second in Q3 to 50 exahashes per second by year-end, a gain of 13.1 exahashes per second in just months. Mara isn't just accumulating Bitcoin, it's maximizing returns. The firm boasts a 12.3% BTC yield for Q4 and 47.6% year-to-date, according to a December 9 SEC filing. This aggressive strategy echoes MicroStrategy's Bitcoin playbook, as Mara's July Treasury overhaul committed the company to retain all mined Bitcoin and leverage capital markets to expand reserves. With its $1.1 billion Bitcoin buy and industry-first 50 exahashes per second hash rate, Mara is solidifying its place at the forefront of Bitcoin mining. As the company's CEO hints at the further expansion, the crypto world will be watching closely. Mara isn't just mining Bitcoin, it's mining dominance. That's all the story for now. This is me, Ruchi Sharma, signing off. Do like, share and subscribe to 3.2 TV, and for more information stories, log on to our website www.3worstv.io or scan the QR code.
Hello and welcome to 3.2 TV. I am Vishakha Thakur and you are watching our special show, Metaverse Magic. This week, the Metaverse economy, with a market cap surpassing $17 billion, has continued its upward trajectory. So leading the charge was Sandbox's Sand token, which skyrocketed by 33.8%, followed by Floki Inu with a 13.4% rise, Decentraland's Mana with 10.4%, Illuvium's ILV by 8.9%, Axie Infinity's AXS rose by 7.9%, and Engine Coin increased by 4.9% in the past 7 days. Well, this marks the high-end interest of the investors' confidence and sustained platform engagement. So now let's get around to talking about major updates from popular metaverse platforms in the ecosystem. Sandbox grabbed attention by launching 2 blockbuster games based on Hellboy and Terminator: Dark Fate. The Hellboy game, developed in collaboration with Lionsgate, North America's largest and most successful mini-major film studio, immerses players in supernatural adventures. Meanwhile, the Terminator game takes players into a dystopian 2042 where they fight against killer machines in a survival-based storyline. Now, these launches coincided with the Sandbox's Alpha Season 4, which broke prior engagement records. With over 400 partnerships, including major names like Gucci and Warner Music, Sandbox continues to strengthen its position as a leader in the metaverse gaming space. Decentraland, on the other hand, are focused on innovation by integrating artificial intelligence. So, partnering with in-world AI, Decentraland introduced intelligent, non-player characters or NPCs to enhance user interactions. Now, this move has not only enriched the platform's virtual experiences, but also helped Mana record an impressive 188% price surge over the past month. Meanwhile, Axie Infinity took a user-first approach by launching its Axie Adoption Center. This initiative simplifies the onboarding process, allowing new users to connect their Ronin wallet, complete missions, and adopt Axies permanently. So over the past week, AXS saw a 7.9% price surge, with its market cap exceeding $1.4 billion. And now let's listen in to what our special guest has to say about the current state of the metaverse sector and outlook.
Friends, I'm Sunil David. I'm an independent digital technology consultant. Over the last 1 year, we've seen a lot of traction in the metaverse space. If you look at from an enterprise standpoint, we've seen manufacturers, banking and financial service companies, retail outlets experimenting with metaverse, and we've seen some of those being productionized. On the consumer side also, we've seen a lot more traction when it comes to use of AR, VR, and so on. Now, what's in store for 2025 and beyond? I just wish to highlight 4 important trends that are likely to play out going forward. Number one, the whole aspect related to interoperability. As you all know, there are a number of metaverse platforms like Roblox, Decentraland, and so on. I see a lot more work being done to make sure these platforms interoperate, work seamlessly, so that it becomes easy for people to move from one platform to the other. Second, in the area of immersion technologies, we've seen a lot of advancements in the AR and VR space. We've seen costs of VR headsets coming down. And going forward, I only foresee a situation where the cost of these headsets will come down even further, and that will drive a lot more adoption. Third, the very important characteristics of decentralization, which is the backbone of the metaverse platforms. A lot more adoption of blockchain, which is only going to grow going forward. And fourth, and most importantly, the aspect related to user centricity, where personalization and accessibility will be the core for user experiences. I see a lot of companies working in that space, making sure that for a user, there is that seamless experience. The ability to move from the physical and digital worlds will be very, very good. So overall, I'm fairly bullish about the growth of the metaverse market in 2025 and beyond. Thank you very much.
Well, that's all in this episode of Metaverse Magic. I will be back with more such updates from the metaverse space. Till then, keep watching 3.0 TV. Do log on to our website www.3versetv.io or scan the QR code. This is me, Vishakha Thakur, signing off. Aave, the popular decentralized exchange's native token with a market cap of $5.68 billion, has surged past the $370 mark, gaining approximately 48% in just 24 hours. Well, this milestone, the first since 2021, has delivered impressive returns for active traders, with 30-day and 365-day gains of 96% and 290% respectively. So institutional activity is a key driver of Aave's rally. President-elect Donald Trump's DeFi project, World Liberty Financial, has invested $1 million in Aave tokens, demonstrating confidence in the asset's growth. Also, the Trump-backed initiative acquired 2,631 ETH and 41,335 Link, reinforcing its commitment to the DeFi space. According to on-chain analytics platform Sentiment, this surge is closely tied to a significant drop in the mean dollar invested age, indicating that previously dormant tokens are now actively circulating, adding to the bullish momentum. Meanwhile, Blockchain Capital, an early investor in Aave, deposited 16,964 Aave tokens worth $5.06 million to FalconX after 2 years of inactivity. This firm, which acquired 233,256 Aave at an average price of $82.9, still holds a massive 216,292 tokens valued at nearly $79 million, signaling re-engagement from significant stakeholders. Now, technical developments further support Aave's bullish trend. The token benefits from its collaboration with Balancer, which recently launched its V3 upgrade, introducing enhanced liquidity pools and advanced trading tools. So this integration creates 100% boosted pools, driving liquidity and trading volume. Additionally, Aave's upcoming launch on Linea, Consensus's ZK rollup network, promises to improve scalability and reduce transaction fees, encouraging greater adoption and usage. Also, Aave's resurgence combines institutional confidence, whale reactivation, and strategic ecosystem upgrades, positioning it strongly for sustained growth. So that's all for now. Keep watching 3.0 TV for more such updates, and do log on to our website www.3versetv.io or scan the QR code. This is me, Vishakha Thakur, signing off.
Jupiter, a leading decentralized exchange aggregator on Solana, is set to airdrop GUP tokens to its community over the next 2 Januaries. The Jupiter DAO approved a revised proposal after the first attempt to distribute $1.7 billion in GUP tokens failed. The new proposal, which receives 87% support, prioritizes real users and rewards JUP stakers. If you're looking to make easy money, claiming this airdrop is an excellent opportunity. Here's a step-by-step guide on how you can qualify for the airdrop. To claim your airdrop, visit the Jupiter website and securely connect your wallet. This is your first step to engaging with the platform and participating in its ecosystem. So, Jupiter offers a referral program where you can invite new users to the platform and earn rewards. Once logged in, navigate to the referral section to generate your unique referral link and share it with your friends. If you have staked Jupiter's JUP tokens and participated in governance voting, you are eligible for active staking rewards. Keep an eye on updates for when you can claim these rewards, which are funded by the LFG Launchpad. Additionally, if you have been active in the ecosystem, you may qualify for additional airdrop opportunities as Jupiter continues to distribute tokens to its loyal users. Attending community events like Jupiter's weekly planetary calls is another way to earn rewards. To qualify for these events, ensure that you have staked at least 50 JUP tokens. These events offer the chance to learn more about the platform and its developments while also earning exclusive rewards. To never miss out on future airdrops or important updates, follow Jupiter on social media and stay tuned to the latest announcements. This will ensure you are always in the loop about upcoming events and new opportunities for claiming JUP tokens. By following these simple steps, you can maximize your chances of claiming rewards and participating in Jupiter's ongoing airdrop strategy. That's on the story for now. This is Ruchi Sharma signing off. Do like, share and subscribe to 3.0 TV, and for more information stories, log on to our website www.3versetv.io or scan the QR code.
Hello and welcome to 3.0 TV. I am Vishakha Thakur. SUI has reached an all-time high of $4.9, surging nearly 20% over the past week and 10% in just 24 hours. Well, this price spike comes on the back of strong ecosystem developments and record-breaking trading activity, solidifying its bullish trajectory. Well, the rally began gaining traction on Wednesday after the announcement of Backpack's integration with the Sui blockchain. This partnership is set to enhance user experience while opening up new listing opportunities for projects on the Sui network. Following the news, Sui's price jumped 18% in a single day, reflecting high-end investor optimism. Now, adding to the momentum, Sui's decentralized exchange volume reached unprecedented levels. Total DEX volume crossed $35 billion with a 24-hour trading record of $466 million on Wednesday, nearly double the previous daily average of $250 million. In fact, the total value locked on the Sui network climbed from $1.51 billion on December 2nd to $1.87 billion on December 12th, marking a 23% increase. Futures open interest also saw a dramatic rise, jumping 32% from $675 million to $897 million within a day, signaling robust market inflows and growing demand for Sui. So as per technical analysts, with Sui's relative strength index now at 71, Sui could extend its rally to $5.68. Well, Sui's latest price surge, driven by ecosystem growth, trading activity and strong technicals, underscores its growing prominence in the crypto market, and as network activity and liquidity continue to climb, the bullish outlook remains intact. So that's all in the story. Keep watching 3.0 TV for more such updates, and do log on to our website www.3versetv.io or scan the QR code. This is me, Vishakha Thakur, signing off.
As the crypto market stands on the precipice of 2025, investors, analysts, and enthusiasts alike are brimming with anticipation. Will Bitcoin's halving, regulatory headwinds driven by Donald Trump, and ETF frenzy catapult it to unprecedented heights? Will Ethereum regain its edge against its agile competitors? Bitwise, a prominent crypto ETF issuer, has laid out a tantalizing roadmap for what it dubs the golden age of crypto. In 2024, Bitcoin surged 141.72%, fueled by a record-breaking inflow of funds into ETFs and the April halving that restricted supply. But the real excitement lies ahead. Bitwise projects Bitcoin will breach the $200,000 mark in 2025 with a potential moonshot to $500,000 or more if whispers of the US government creating a 1 million BTC strategic reserve come to fruition. This monumental rise is poised to redefine Bitcoin's role not just as digital gold but as a global reserve asset, with the world watching its every move. Despite a 75.7% rally in 2024, Ethereum faced stiff competition from faster programmable blockchains. However, the tide is turning. Layer 2 solutions like Base and Starknet are poised to enhance scalability and adoption. Meanwhile, the introduction of spot Ethereum ETFs is set to attract billions in institutional capital. Bitwise predicts Ethereum's narrative in 2025 will shift from being a rival blockchain to a cornerstone of the decentralized economy. Dubbed crypto's Phoenix, Solana soared 127.7% in 2024, driven largely by meme coin mania. But 2025 holds greater promise. With projects like Render flocking to its ecosystem, Solana is set to transition from hype to substance. Bitwise believes its ecosystem maturation will cement its status as a leading blockchain. Enter the quirky yet explosive world of AI-driven meme coins. In 2024, we saw AI agents like Truth Terminal and Clanker revolutionize token creation. For instance, Truth Terminal helped propel the meme coin GOAT to a $1.3 billion market cap, showcasing how AI can ignite new trends in the crypto space. Clanker, operating on Coinbase's Layer 2 base, autonomously launched over 11,000 tokens in a month, raking in $10.3 million in fees. While many of these tokens lack utility, this convergence of AI and crypto is a thrilling experiment that Bitwise sees as a collision of two transformative technologies. The IPO wave is set to crash onto crypto shores. Unicorns like Circle, Chainalysis, and Kraken are poised to go public, driven by increased institutional interest and regulatory clarity. Bitwise forecasts Coinbase joining the S&P 500 and MicroStrategy making its way to the Nasdaq 100, sparking billions in institutional investments. Stablecoins are also set to shine, with Bitwise predicting their market cap will soar past $400 billion, driven by global remittance adoption and deeper fintech integration. Bitwise paints a breathtaking picture of the long-term future. Bitcoin surpassing gold's $18 trillion market cap and trading at over $1 million per coin by 2029. This marks not just the culmination of a 4-year cycle, but the dawn of Bitcoin's new era as the ultimate global asset. As 2025 unfolds, all eyes are on the crypto market. With Bitcoin, Ethereum, and Solana leading the charge, meme coins driven by AI rewriting the playbook, and IPOs shaking up the landscape, this year promises to be a turning point. Whether it's Bitcoin soaring past $200,000 or stablecoins dominating global finance, Bitwise's prediction ignite one question: will 2025 live up to the hype? One thing is certain: crypto isn't just reshaping finance, it's reshaping the future. The golden age of crypto is here, and the story is just beginning. That's all the story for now. This is Mirju Sharma signing off. Do like, share, and subscribe to 3.0 And for more information stories, log on to our website www.3wastv.io or scan the QR code.
Donald Trump, the 45th President of the United States and now the presidential candidate who recently survived a second assassination attempt, has unveiled the much-anticipated crypto platform World Liberty Financial. Well, the crypto project promoted by him and his sons Donald Jr. and Eric on X Spaces on September 16 will issue a digital token, WLFI, which can only be purchased by verified accredited investors in the US. So talking about the World Liberty Financial Platform, it is a digital asset platform aimed at the decentralized finance segment and is supposed to help with financial security as well as being able to transact freely, the report said. No specifics about World Liberty Financial or the actual start date were provided during the launch. However, Bloomberg reviewed a white paper for World Liberty Financial before Trump's X Spaces announcement, which designated Donald Trump as chief crypto advocate, Eric and Donald Jr. as Web3 ambassador, and 18-year-old Barron Trump as chief DeFi visionary. So a disclaimer in the document said that World Liberty Financial is not owned, managed, operated, or sold by the Trumps, while noting they may receive compensation. Interestingly, the US presidential candidate is seeking donations and votes on the back of his digital asset outreach, going so far as to promise to make the US the crypto capital of the planet. We are going to make the US crypto capital of the planet. If we don't do it, China is going to do it. China is doing it anyway, but if we don't do it, we are not going to be the biggest, and we have to be the biggest and the best, Trump said while speaking on over 2-hour-long X Spaces live stream. That's all in this update. Keep watching 3.0 TV for more such updates, and do log on to our website www.3wastv.io or scan the QR code. This is me, Vishakha Thakur, signing off.
If you have been battling it out in Hamster Combat and aiming for the massive airdrop, the finish line is near. On September 28, 2024, the first season comes to an end and all your hard-earned coins, skins, and achievements will magically turn into hamster tokens. By 6 p.m. UTC, a snapshot of your progress will be taken and rewards will start flowing. So power up, wrap up those final battles, and get ready to claim your tokens. It's your time to shine in the Hamster Combat world. On September 26, 2024, the new hamster token will launch with 60% of its total supply allocated for airdrops. But before we dive into the season finale, here's an exciting update you won't want to miss. Binance is set to distribute 3 billion hamster tokens, that's 3% of the total supply through its launch pool starting September 19th, which is tomorrow. To break it all down, let's turn it over to my colleague, Mr. Abhishek Chauhan, for more insights.
Thank you, Shikha Singh. So Binance has their own launch pool where essentially if you stake BNB tokens or FDUSD, which is Binance's own stablecoin, you can stake one of these two tokens and you can earn hamster tokens. So they have launch pools where they keep events for any new tokens that come onto Binance. You can earn the tokens by staking one of these two tokens. For hamster specifically, this competition would be going on for 3 days, wherein they are airdropping $3 billion tokens of hamster, and the total supply of hamster is 100 billion. So that's 3% of the entire hamster supply that's being airdropped. And in the BNB pool, we have around 2.55 billion, which is being airdropped. And in the FDUSD pool, we have $450,000 of hamster. We have 450,000 tokens worth of hamster, which are being airdropped. So these are the two things. You just have to come for the 3 days. You have to stake BNB, and you would be earning hamster tokens every hour. They are also doing something known as Hamster Super Run, which would be coming a little bit later, where you can stake in your hamster tokens for 7 days and you can share a pool of 100 million hamster tokens as well. So this is the whole Binance launch pool details where, it's 3% of the supply, which is quite huge.
So apart from Binance launch pool, there's also some news about Crypto.com, right?
That's correct. So all you need to do is buy and hold $20 worth of CRO tokens. The pool size is $200,000 worth of hamster. So whenever hamster starts trading, Crypto.com would essentially would be sharing a pool size of $200,000 worth of hamster token. This would be going on from 13th to 26th of September, and all you need to do is buy and hold $20 worth of CRO. Top 15,000 eligible winners would be receiving this reward, and this depends on the net buys which happen. So net buys is buys, total number of buys minus sell minus withdrawals. And let's give you an easier example to understand this. Say I buy $2,000 worth of CRO. The total net volume done by the pool by the 15,000 participants is $1 million. My contribution in that was $2,000. The pool size that we know, the winning amount or the reward size is $200,000. So when you take $2,000 divide by $1 million, which is the pool size, and you multiply it by the reward, which is $200,000, you would get $400. So essentially, I would be receiving $400 worth of hamster tokens if I bought and held $200,000 worth of CRO. So it depends on the total net volume that comes after the end of the campaign, but the more CRO you buy and hold, the more hamster tokens you would earn. So yeah, it's a good thing. You just need to buy CRO, you just need to hold it, and you can earn a lot of hamster tokens as well.
So just to let the users know that the tokens that you will be receiving in the Binance launch pool and the Crypto.com campaign has nothing to do with the tokens that you earn in the game, which is in the game Hamster Combat. But there are concerns that the open network might struggle with the expected traffic surge from the hamster token launch, given past issues with outages during previous airdrops. Meanwhile, as Hamster Combat moves into Season 2, the game is implementing strict anti-cheating measures to ensure fairness and solidify its position as a leading Web3 gaming platform. Well, that's all in today's special segment. We will keep you updated with more such interesting updates. Until then, keep watching 3.2TV. Do like, share and subscribe to our YouTube channel. Do log on to the website www.3versetv.io or scan the QR code to know more. What's up gamers, this is me Shikha Singh back with another Gaming Zone video. And today I'm going to take you to some nostalgic memories. Remember when the world was simpler and the most thrilling challenge was guiding a pixelated bird through a maze of pipes? Flappy Bird wasn't just a game, it was a phenomenon. For many of us, it was a cornerstone of our childhood gaming experiences.
Flappy Bird.
Flappy Bird.
Flappy Bird. Why is it so hard? Downloaded more than 50 million times.
It is the number one app in over 100 countries.
It's a global sensation.
And people going crazy by the end it was game over.
It's across social media expressing their disappointment.
You can't play Flappy Bird anymore.
The original Flappy Bird, created by Dong Nguyen, took the world by storm in 2014. With its deceptively simple mechanics, it captivated millions. Whether you were taking a break between classes or just trying to beat your friend's high score, Flappy Bird was everywhere. Fast forward to a decade and the game that once dominated our screens is back, but not in the way we remember. Introducing the new Flappy Bird, now relaunching on Telegram as a part of a groundbreaking Web3 experience. It's more than just a nostalgic trip, it's an entire new world of gaming. So the Flapathon event marks the game's return, blending its classic gameplay with the innovation of blockchain technology. Players can now earn crypto tokens through their high scores and game progress thanks to its integration with the open network. Powered by the Ton network, Flappy Bird's revival promises a new twist. The game introduces a new token, the Flap token, alongside airdrops and staking rewards, making the beloved game a gateway to the world of cryptocurrency. However, the comeback hasn't been without controversy. Fans were dismayed to learn that Dong Nguyen, the original creator, isn't behind this new version. Instead, it's been taken over by the Flappy Bird Foundation with a shift towards a crypto-centric model that many traditional gamers find jarring. Nguyen himself has distanced himself from the project, stating his lack of support for the crypto angle. This has sparked a wave of skepticism among those who cherish the game for its simplicity and charm. Despite the controversy, the game's revival offers fresh experiences, new characters, modes and challenges. For those who remember the thrill of the original, it's a chance to relive those moments with a modern twist. Flappy Bird's return is a mix of nostalgia and innovation. It's a reminder of simple times now intertwined with the future of digital gaming. So whether you are in it for the crypto or just want to beat your high score, the Flappy Bird legacy lives on. So basically you have to subscribe to the Flappy Bird channel on Telegram and get started, and you can share your friends to earn Flappy tokens. Also for your information, this game might airdrop its token on several exchanges, just how Notcoin and Hamster Combat did. So you can also change your birds, and there are a lot of birds, like you can shop for more birds. You can even buy Angry Bird, the Rare Bird, Big Head Bird, Devil Bird, and many more. And you can earn points by following Flappy Bird on the social media platforms, just how you did in Hamster Combat. So dust off your tapping skills and join the flight, and the bird is back and it's flapping into the future, because no matter how much things change, some joys like catching the high score never gets old. Well, this is all today's special segment. We will keep you updated with more such interesting updates. Until then, keep watching 3.0 TV. Do like, share and subscribe to our YouTube channel. Do log on to the website www.3versetv.io or scan the QR code to know more. After much delay, Hamster Combat has finally released the snapshot that will serve as the foundation for the upcoming token generation event on September 26th. The snapshot will determine the distribution of tokens to players, marking a major milestone for the game. Not everything has gone smooth. Some players have had their token bounties reduced after being flagged as cheaters by a newly implemented anti-cheating system. These players were advised to play fair and wait for the next season's airdrop. So as part of the system, 2.3 million players were eliminated, though many claim that authentic players were wrongly flagged. as well. Everything that happened before the snapshot is now considered Season 1. Hamster Combat has now entered the interlude season, during which 131 million players qualified for the airdrop. However, only 88.75% of their token allocation will be distributed immediately, with the remaining 11.25% vested and unlocked 10 months after listing. An additional 15% of the tokens will be dropped during the upcoming Season 2, promising more excitement and more opportunities for players to grow their token stashes. Many players who spend significant time playing the game are unhappy with their token allocations. Most players received between 200 and 1000 hamster tokens, which was far below their expectations. There are also accusations that larger token shares were unfairly allocated to big YouTubers and influencers, sparking frustration among the general player base. Further adding fuel to the fire were complaints surrounding the eligibility criteria for the token rewards. Initially, the game emphasized the importance of profits per hour, only to later shift its focus on collecting keys. Many players invested significant time collecting keys only to find out that referral invitations had a greater impact on the rewards. This perceived change in priorities has led to accusations of betrayal and unfair distribution for regular players. With the storm of Season 1 behind them, players now look ahead to Season 2 eager for a fresh start. During the interlude season, players have a chance to gain a strategic edge that the game's team claims will come in handy in the upcoming season. Whether this will be enough to regain the trust of disillusioned players remains to be seen. Well, that's all in today's special segment. We will keep you updated with more such interesting updates. Until then, keep watching 3.TV. Do like, share and subscribe to our YouTube channel. Do log on to the website www.3vastv.io or scan the QR code to know more. At the core of Hamster Combat's long-awaited token generation event is the introduction of 60 billion hamster tokens into circulation. To get a sense of the token's potential value, let's consider the average market capitalization of the 5th to 15th ranked tokens, which sits at around $10 billion. If Hamster Combat were to launch at a similar market capitalization, we are looking at a token value of approximately $0.15 per token. What does this mean for the average player? Let's break it down. If a player earned 100 hamster tokens, they would have $15 or roughly 1,350 rupees. Earning 500 hamster tokens would net $75 or around 6,750 rupees. 1,000 token stash would bring in $150 or 13,500 rupees. While these numbers aren't life-changing for most players, they do offer a tangible reward for their efforts. However, for those expecting massive payouts, the reality of these calculations might be sobering. Well, that's all in today's special segment. We will keep you updated with more such interesting updates. Until then, keep watching 3.TV. Do like, share and subscribe to our YouTube channel. Do log on to the website www.3vastv.io. Scan the QR code to know more.
In a bold move rattling the crypto world, financial heavyweight BlackRock has filed with the SEC demanding Coinbase process Bitcoin withdrawals within 12 hours. The request shines a spotlight on a simmering issue. Does Coinbase have enough actual Bitcoin to back all user accounts? Or are customers holding so-called paper Bitcoin, claims to Bitcoin that may not exist? Imagine a bank that only keeps a fraction of the money it owes customers. If everyone rushes to withdraw, the bank could run out of cash. Some fear Coinbase might be in a similar situation, issuing IOUs for Bitcoin instead of holding the real thing. BlackRock wants to ensure that if everyone demands their Bitcoin, Coinbase can deliver. BlackRock, a global asset management firm with trillions of dollars in assets, recently entered the Bitcoin space with its own Bitcoin exchange-traded fund. Now they're making sure their funds and their investors are protected. By asking for withdrawals to be processed within 12 hours, BlackRock is pushing Coinbase to prove its reserves are solid. If Coinbase can meet this demand, it will ease fears of paper Bitcoin. But if they can't, the crypto world could be in for a reckoning. This move could set a new standard for transparency across crypto exchanges, forcing them to prove they hold enough assets to back their customers' accounts. With BlackRock leading the charge, other major players may follow suit, putting pressure on the industry to become more accountable. Now, all eyes are on Coinbase. Will they meet BlackRock's ultimatum, or will this expose deeper issues within the exchange? One thing's for sure, the countdown to clarity has begun. That's all the story for now. This is Murji Sharma signing off. Do like, share and subscribe to 3.TV, and for more information stories, log on to our website www.3verstv.io or scan the QR code.
Hamster Combat is gearing up for its airdrop on 26 September, which is tomorrow, and the airdrop is set to reach 131 million users. But players aren't thrilled, claiming their efforts were unfairly rewarded. And in tandem with this, Binance had announced that Hamster Combat was the 58th project on its launch pool platform, giving users a chance to earn the new token by staking their BNB and FDUSD. The Hamster token is set to be listed on September 26, 2024 at 12 p.m. UTC, making Binance the first exchange to offer it. Participants in the launch pool will be able to start farming Hamster tokens from September 19th, 2024 until September 25th, 2024, which is today. A total of 3 billion Hamster tokens, representing 3% of the total supply, were available as rewards for those who locked their BNB and FDUSD tokens. Out of these, 85%, which is 2.55 billion Hamster, will be allocated to the BNB pool, while 15%, which is 450 million Hamster, is set aside for the FDUSD pool. These pools have hourly limits to ensure fair distribution, with a capitalization of about 1.52 million Hamster for the BNB pool and 267,000 for the FDUSD pool. Binance has now locked 14 billion USDT to launch 3 billion Hamster tokens for the Hamster Combat community. With just one day left to join the launch pool, holders of BNB and FDUSD can participate and earn rewards. Apart from this, everyone who was eligible for the airdrop and have chosen the withdrawal method have already received some share of the tokens allocated to them. Only 88.75% of users' tokens allocation will be distributed immediately, while the remaining 11.25% vested and unlocked 10 months after listing. An additional 15% of tokens will be dropped during the upcoming Season 2. More updates are anticipated as the launch date approaches, urging players to act quickly to secure their participation. Well, that's all in today's special segment. We will keep you updated with more such interesting updates. Until then, keep watching 3.TV. Do like, share and subscribe to our YouTube channel. Do log on to the website www.3verstv.io or scan the QR code to know more.
The Middle East and North Africa region, where ancient history meets rapid modernization, is now having a crypto glow up. A report by Chain Analysis shows a jaw-dropping 48% surge in crypto adoption from 2022 to 2023, putting MENA on the global crypto map. From July 2021 to June 2022, MENA wallets received $566 billion in cryptocurrency. Turkey, being a heavyweight, leads with $258 billion, followed by Egypt and the UAE flexing their growing crypto muscles. What's sparking this digital gold rush? A tech-savvy young crowd of over 50% under 30 years, eager to ditch the slow-moving dinosaurs of traditional finance. Crypto offers a new financial playground driven by remittances and blockchain buzz. Governments are getting on the bandwagon too. The UAE, for instance, is pushing out the crypto welcome mat, with the Dubai Financial Services Authority cooking up rules to promote transparency and security. DeFi and NFTs are gaining traction as the region tries to attract tech-savvy investors. Challenges? Sure. Regulatory grey areas and security worries are stumbling blocks, but crypto isn't just a phase. Traditional finance is being nudged off the throne as fintech sweeps in. While men dominate the crypto scene, women, especially in Egypt, are entering the game aided by educational drives and growing awareness. With youthful energy, progressive policies, and the hunger for financial innovation, MENA is set to be a key player in the 2024 crypto arena. Keep your eye on this region. It's where digital revolutions are brewing faster than morning coffee. That's all the story for now. This is Mirchi Sharma signing off. Do like, share, and subscribe to 3.TV. And for more information and stories, log on to our website www.3watchtv.io or scan the QR code.
What's up gamers, this is me Shikha Singh back with another Gaming Zone video. So I was watching a documentary about an infamous $1 billion scam. And honestly, it felt like nothing compared to the chaos of Hamster Combat's airdrop. Just kidding, but seriously, this video is going to be a full-on rant, so grab your tea because it's time to spill some. Let's dive in.
The crypto market is ablaze with Bitcoin shattering records to surge past $104,000, a historic high that has created an unforeseen buzz in the financial world. While meme coins are fueling a trading frenzy, Solana's decentralized exchanges are raking in millions and traders are swinging between exhilarating highs and crushing lows. Yet, amid this chaos, a quiet class of victors is emerging. Not the traders, not the speculators. The real winners are the architects of the crypto ecosystems, those who build the picks and shovels of this digital gold rush. Solana-based decentralized applications have witnessed an unprecedented surge in activity, with decentralized exchanges reaping massive profits. Radium, an automatic market maker, set a new record earlier this month, collecting $11 million in 24-hour fees. Daily DEX volumes on Solana exploded from $1.6 billion to a staggering $10 billion peak, according to Blockworks. This mirrors the California gold rush of the 19th century, where the wealthiest were not the gold miners, but the entrepreneurs selling tools and services to them. Similarly, in crypto, infrastructure providers like blockchain networks, trading platforms, and wallet providers are cashing in on this modern gold rush. David Gogol of DYDX Foundation highlights that exchanges are consistently the biggest beneficiaries during bull runs. The surge in trading volumes directly translates into substantial fee revenues. Non-custodial wallets like Phantom are carving a niche by offering seamless integrations. These wallets are now capturing significant activity, particularly in mobile-first ecosystems. Companies like Circle and Tether benefit from increased stablecoin supply, acting as critical on-ramps for the growing user base. Platforms like Pump.Fun have seen transaction volumes skyrocket. Despite controversies, these continue to generate significant fees from token launches. Gracie Shen, CEO of BitGet, draws parallels between the current market and the 2017-18 ICO boom, where infrastructure providers, rather than participants, reap the lion's share of profits. Similarly, in this bull run, those enabling the trades, exchanges, wallet providers, and dApps are minting fortunes. While trading volumes are at record highs, analysts are cautious about the bull run's longevity. Solana's fees skyrocketed during the frenzy but have stabilized now, indicating the market could normalize. Diversifying use cases beyond concentrated dApp activity is seen as critical for long-term growth. As the crypto market evolves, the picks and shovels of the blockchain ecosystem, DEXs, wallets, stablecoin issuers, and infrastructure providers remain the biggest winners. For traders and speculators, leveraging these tools with calculated strategies might still yield profits, but the infrastructure backbone is where the real gold lies. That's on the story for now. This is me, Ruchi Sharma, signing off. Do like, share and subscribe to 3.TV, and for more information stories, log on to our website www.3worldtv.io or scan the QR code.
In the heart of a nation known for its rich tapestry of culture and innovation, a digital revolution is quietly brewing. India, a land of a billion dreams, is on the cusp of becoming a global powerhouse in the Web3 and crypto ecosystem. According to a recent report by Hashed Emergent, a Web3 venture capital firm, India is not just participating in the Web3 revolution, it is spearheading it. Well, the country is home to a staggering more than 1,000 Web3 startups spanning diverse sectors such as finance, infrastructure, and entertainment. So this startup ecosystem is not merely a collection of companies. It is a dynamic network fueled by creativity and ambition, with a cumulative funding of over $3 billion since 2020. So the first 9 months of 2024 alone saw an influx of $462 million in investments, marking an impressive 82% growth from the previous year. This surge is largely attributed to global Web3 funds and accelerators, which are increasingly recognizing India as a fertile ground for innovation. The report highlights that a majority of these investments are directed towards Web3 infrastructure businesses, laying the groundwork for a robust digital economy. As the world races towards a decentralized future, India stands out with its impressive pool of talent. Currently, the country boasts nearly 12% of all crypto developers globally, making it the second largest developer base after the United States. Projections indicate that by 2027, India will ascend to the top spot, further solidifying its position as a leader in the Web3 space. Now, despite initial setbacks due to a challenging crypto tax regime, 2024 has witnessed a remarkable resurgence in crypto investments across centralized exchanges. Data from CoinDCX reveals that 45% of retail portfolios in India now include blue-chip cryptocurrencies, underscoring a shift in investor sentiment. Well, the gaming industry too is on the brink of a transformation, with gaming platform Listo predicting it will reach a staggering $9.2 billion in the next 5 years. Web3 gaming is emerging as a key contributor, driven by higher average revenue per user and a growing appetite for immersive digital experiences. The Indian government, while navigating the complexities of regulation, has initiated several programs to bolster Web3 growth. While major use cases such as land registry, digital certification, and supply chain management are being explored, showcasing the potential of blockchain technology to enhance transparency and efficiency. As traditional economy goes in for an overhaul, making way for a new dawn, one that promises to be as exhilarating as it is unpredictable. The future is decentralized and India is ready to lead the way. That's all in the story. Keep watching 3.TV for more such updates, and do log on to our website www.3worldtv.io or scan the QR code. This is me, Vishakha Thakur, signing off.
The NFT market kicked off December with a surge in sales exceeding $187 million in weekly transactions during the first week of the month, continuing an upward trend that began in October. This performance eclipsed the strongest week of November, which recorded $181 million in sales. Ethereum, the leading blockchain for NFTs, saw a substantial increase in sales totaling $92 million, a 44.7% jump from the previous week. This boost was fueled by the strong performance of popular NFT collections such as Pudgy Penguins and CryptoPunks. Pudgy Penguin in particular stood out with $25 million in sales, while CryptoPunks raked in $16.5 million.